Welcome back to the channel, everyone. Today I'm going to be talking about CCIV and Lucid Motors and their potential future partnership with a huge Silicon Valley company, maybe even Apple. I'm also going to be giving an update on Nio and talking about their February deliveries and also their full year 2020 results. So stay tuned and let's make some money. Firstly, let's talk about CCIV, and you might have seen this video making its rounds on the internet.
This is the perfect platform for any Silicon Valley big company to prove out its AD software, I think.
Now, was this all developed?
Peter Rawlinson is basically saying that he wants to start a partnership. He says that he wants to create the very best EV technology in the whole world. He says that Lucid has the best car, the best hardware and wiring, with 2 terabytes of onboard storage. Peter says the Lucid Air is the best platform for any big Silicon Valley company to prove out its autonomous driving technology. Therefore, Peter is basically saying that he wants to partner with someone like Apple or Google and take their autonomous driving software and their operating system and put it inside the Lucid Air. Apple has already been rumoured to be working on autonomous driving technology, and 3 current Lucid Motors executives used to work for Apple, including Lucid Motors' current head of software. If you're enjoying the video so far, be sure to subscribe to the channel by clicking that red button down below to benefit from in-depth analysis on new, up-and-coming stocks, regular news updates on fast-moving stocks, and expose-style videos to help save you time and grow your stock portfolio. Also, be sure to check out the Patreon, linked in the description down below as well, to become part of the team and discuss stocks before they start blowing up, like eHang, BNGO, CCIV, and more. You also get access to my stock portfolio, which is updated daily, weekly live streams, one-to-one access, and more. But for now, let's get back to the video. The only downside that I could think of to this interview is that Peter is basically admitting or suggesting that Lucid Motors doesn't have any fully autonomous technology and doesn't really have any plans to develop any of that in-house either. The Lucid Dream Drive has level 2 autonomy and potential to upgrade to level 3 autonomous driving. However, again, I don't think Peter has any plans to upgrade to level 5 in-house and wants instead to form a partnership with someone else for that. This could be beneficial for Peter Rawlinson and Lucid Motors, or it could come back to bite him. Peter has said it himself that manufacturing everything in-house is super important. If you don't, you have to rely on someone else and they could let you down. But I'm sure if he does partner with a very large Silicon Valley company, they probably won't let him down. And I guess Lucid still have a very good powertrain that can be used on pretty much any of their future vehicles. They just keep the same powertrain and change the shell around it. Lucid also have great partnerships with LG for their battery technology and plan on announcing more partnerships in the future. Something that I think could be quite interesting is seeing how a partnership with a large Silicon Valley company would affect their current relationship with Amazon. Obviously, Amazon supply the Alexa for their in-car entertainment system. Obviously, Amazon are based in Seattle, not Silicon Valley, and therefore it's unlikely that Lucid Motors would utilise Amazon for their autonomous driving technology. Peter Rawlinson said in an interview last year that he doesn't see Amazon as a competitor. He wants to continue working with Amazon and using the Alexa in the Lucid vehicles. Although, I wonder if they did announce a partnership with Apple, if Apple would try and push the use of Siri in their vehicles as well as supplying the autonomous driving system. There's also been a photo doing its rounds on Twitter showing an Apple logo and a Lucid Motors logo together on a store in Miami. Although I think this is just a coincidence. I think Apple will occupy the 2nd floor of the same shopping centre. I think a partnership between Apple and Lucid Motors would be brilliant for Lucid. They could leverage that partnership and get expansion advice from Apple, and they also basically get a giant free form of advertising. But I also think Lucid will need to bring something really special to the table to impress Apple. Back in 2013, Apple actually tried to buy Tesla, but the deal fell through. We also know that during the Model 3 production ramp-up, that Elon tried to sell Tesla to Apple, but Tim Cook wasn't interested. And therefore there's quite a bit of history between Apple and Tesla, and therefore Lucid will really have to impress. If Lucid Motors did announce a partnership with Apple, then I think the CCIV stock would absolutely fly. I think it'd probably double from its current position, back up to $60 and maybe even higher, pretty much instantly. If you want to pick up some shares in CCIV before a potential partnership between Apple and Lucid Motors is announced, then be sure to sign up to free trade using my link down below in the description to get a free share worth up to £200 when you invest a minimum of £1. Yep, that's right, you only have to invest £1 and you will get a free share worth up to £200. Let's also talk about the Nio 2020 earnings and the February deliveries. In February, Nio delivered 5,500 vehicles, which is significantly lower than the 7,200 vehicles they delivered in January. Obviously, February has fewer days than January and it might have just been a slow month. But there's also been a worldwide chip shortage. Taiwan Semiconductors manufacture around 70% of the world's chips. These semiconductors are used in pretty much everything from mobile phones, games consoles, cars, and pretty much everything else under the sun. So what's caused this giant chip shortage? Well, as a result of the pandemic, more and more people are being forced to stay inside and are turning to tech to pass their day. As a result of that same pandemic, factories in China that manufacture the chips have been forced to shut. On top of this, China is currently experiencing a water drought. No water means that a lot of these machines that manufacture the chips can't run. Ultra pure water is needed to rinse and clean the chips and also to cool the machines during the manufacturing process. Most auto manufacturers slowed their orders of these chips during the pandemic as they thought that sales would slump. Other companies like Apple though were doubling their orders of these chips to try and stockpile. Now the auto manufacturers want more chips, but they're all sold out. In terms of Nio's earnings though, it's actually quite promising. Q4 2020 revenue was up around 130% from Q4 2019 revenue, and about 45% from Q3 2020 revenue. Margins were up to around 17%, up from around 13% from the quarter before. However, the loss has actually increased by around 25% up to around $212 million. I personally think that actually this is really impressive. Revenues and margins are key drivers on the way to profitability. All Nio has to do now is continue growing their revenues and figure out some of their other expenditure, such as their selling and general expenses. R&D expenditure has also increased, but considering that Nio is still in their infancy and also considering the industry that Nio is in, R&D is quite necessary. Cash at bank is also up significantly from last year, around 45 times its prior year position. In 2019 they had around $130 million of cash in the bank, whereas this year they have around $5.8 billion. $5.8 billion is a significant amount of cash to be operating with. Nio is likely to use this to expand overseas and maybe open a facility in Europe or in the US. They're also likely to use it for general operating purposes and for building up a bit of a stockpile of vehicle inventory. They've also used some of it to pay down their debt and to buy out more of the Chinese government ownership, as the Chinese government still owns around 10% of Nio. The Nio stock dropped around 13% in one day off of these actually fairly decent earnings. I think this is a great time to add to your Nio position and average down your cost, ready for the whole EV market like Tesla, Nio, CCIV and others to start rising once again. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, and that way you'll be alerted when I upload a new video. Cheers!